Good morning and welcome to ForexTV.com's AM Forex New York. Today is Tuesday, December 11th. I'm Caitlin Sisney. The euro fell against the dollar and the yen after investor confidence in Germany dropped to the lowest in almost 15 years in December, as soaring credit costs damaged the outlook for global economic growth. Euro is trading at 146.61. The pound rose for a fourth day against the greenback on speculation the Federal Reserve will reduce its interest rate today, diminishing the attractiveness of dollar-dominated assets. Sterling is trading at 204.88. Meanwhile, yen is trading at 111.92. Today we're joined by David Gilmore from FXA. David, what do you expect to happen with the Federal Reserve this afternoon?
Morning, Caitlin. The Fed decision this afternoon is the key driver for currency markets for today and beyond. And I think the Fed's inclined to cut 25 on Fed funds, 50 on the discount rate. That's priced. But I think there's a sizable risk of something greater. The problems in the credit markets can't be understated, and so far the Fed has understated the problem. And it's hurt their credibility, so they need to get ahead of it. And then the question is, how do markets react to Fed easing? And we're starting to see perhaps a change in behavior, that the market is more likely to buy dollars on lower rates than sell dollars, which would suggest that the theme has changed from one of fearing recession to confidence the Fed's going to get around recession with a pro-growth stance. Not sure that theme conflict has worked itself out, but it's worth watching. The dollar is certainly trying to put in a major bottom. I'm more inclined to think that the problems are more deeply seated, that a recession won't be avoided, and the dollar in time will weaken substantially behind very serious Fed interest rate cuts, something below 3%. And the market's really priced for 6 to 12 months out for a funds rate around 3%. So nevertheless, I remain a dollar bear, and I think today's Fed rate decision and statement are critical. The Fed can't stick to its one-and-done kind of language, which it's done in the last couple of statements, and I think they need to leave the door open for more easing ahead and a more flexible approach. Thank you. Bye.
Thank you, David. That was David Gilmore from FXA. I'm Caitlin Sisney. Join us again later for another update right here on ForexTV.com.